that form by entering it this way. Let's enter a check form and see the transaction fields in it. So I'm going to enter a check this time. That's going to have an actual physical check with a check number in it. And we're going to say that we're going to pay it to, let's make up a vendor. Let's just say Verizon. So I can make it up as we go. We can see all the pieces being put together. Verizon, that's who we're going to pay again. And it's going to come out of the checking account. So we only have two accounts here, the checking account and the savings account. So usually we'll be paying out of the checking account. We'll make it on 1-3, that's fine. Now notice we have a check number here. That if we're physically writing checks, then you can write the check by hand even, but you also want to enter it when you write the check, and the check number here should tie into the actual physical check you're writing. If you're using printers to print the checks out of QuickBooks, then you're still gonna have to buy the physical checks, which will be on paper stock with pre-numbered check numbers, which is an internal control, which you then have to put into the printer and print them out on once you create the checks, which you can do here and print later. Oftentimes it's useful to print them later if you're doing that, because then you can print them all at one time, right? You can write a bunch of checks and then print them hopefully out at one time, as long as you've got the checks properly orientated in the printer. Tags, we're not going to be adding tags here. Then we have the categories. Once again, you've got the two kind of categories. We've got the category here, and then you've got the items. Just like we saw with the bill form, noting this check form looks a lot like the bill form, except that instead of increasing the accounts payable, we're decreasing the asset of the checking account. So we could put it into a category detail, which gives us the account, such as utilities, telephone, and so on, or an asset account like property, plant, and equipment. And then if it was inventory, we'd have to add the inventory item to purchase the inventory down below. So let's imagine here it's going to be in the category. We're just going to put it into telephone. Now, once we've entered this a couple times, then the next time I write a check to Verizon, it'll most likely save the data, the transaction. And that's part of the memorization process that will happen here. It'll also happen within the bank feeds. We can make bank feed rules, totally automating this process, hopefully. All right, we're going to say it was for, let's say, just good old $100. Then we could once again make it billable and add a customer. Why would we do that? Just like we saw with the bill, we might do that in order to pull this into an invoice. In other words, I might say, I'm charging this telephone expense that I had here to a particular invoice to a customer. More likely, we would do that with like gas mileage that we're using or supplies that we are purchasing for a particular project for a particular customer, so that when I create the invoice for the customer, I can pull the actual expenses in to the invoice and then possibly have some kind of markup system for my revenue. So we talked about that a little bit with the bill, so I won't go over that again here. And then down below, we've got the memo we can add. We can add attachments. So if you're buying something like property, plant, and equipment, you might want to add the attachment because you might want to give this to your accountant at the end of the year and give them as much detail as they need to put this on like the depreciation schedules. Otherwise, you might not need it because you have a nice audit trail of at least the check, the physical check that's being written, or if an electronic transfer with the electronic transfer that's being made that gives you pretty good audit trail because it gives you the transfer as well as the transaction data. We can cancel clear, we can print the check, we can order checks, we can make it reoccurring, we can void it here. Then we have the save and close or the save and new. I'm going to record it. What's this going to do when I record it? It's going to decrease the checking account, and the other side is going to be going to the telephone expense. And by the way, let's just look at that here in a journal entry. Let's imagine we made a check form. What's the journal entry for a check form in our simple transaction? I'm going to put $50,000 in cash. This is our so we can see it in a more transparent way. Negative $50,000. What would happen from a journal entry standpoint? We would have the expenses. I'm just generically going to call them expenses of $100 on the debit, and the other side is going to be cash, which is going to go down with a credit. And if I post that, cash goes down with a credit, right? And then we've got the expense generically posted to expense, which is part of the income statement. it goes up with a debit, and then income minus expenses would bring net income down. So net income went down, and we were in balance before, we remained in balance afterwards. Let's see that in QuickBooks. So now let's post it, save and close, and check it out. Let's go to the balance sheet, and we will run it to refresh it. And then if I go into this checking account, drilling down to check out the checking, there's our check form 71. Let's go into that item, boom. And so then now we've got Verizon, there's our check. Let's close this back out, and let's go up and go back. And then the other side's on the income statement. And let's scroll up, run it to refresh it. And then in 2025, we should see that one pulling in. There's the $100 telephone, boom, and bam. So there, for some reason, it's your selection doesn't. All right, I'm just gonna say we see it there. We see it there. I see that. Okay, so that's gonna be the idea. So then if I go back to the first tab, what's gonna happen with the bank feeds? Well, if it's a physical check, then this information pulled into the bank from what I call bank feed limbo. If it's a physical check, we already wrote the check. So what's going to happen when it pulls in here? Is it going to record it 2 times? And no, hopefully it's not going to record it 2 times. Instead, what it's going to do is say, hey, look, I see that you already wrote the check. How does QuickBooks know that? Because it can match up the number, the check number that we wrote, and the date pretty easily, and the dollar amount. Between those 3 things, QuickBooks should be able to hopefully determine that we can match that out to what the check that we wrote. So when we use the bank feeds in this system, we would use them as a check to show that the transaction has actually cleared. So in other words, if we're physically writing checks, we have the added problem of like the telephone company coming back to us and saying, you didn't pay us. And then we'd have to go, okay, what if that happened? I'd go in here and go into my expenses center. And then we would go and we could go into the vendors, and I can say, all right, let me look for Verizon down here. Verizon, there it is that we just added at the bottom. And then I can say, look, I see that I wrote a check right here that is right here. So I've written a check. But then we have the added problem of, did the check clear or not? Because maybe it got lost in the mail. How can I check that? Well, then I have to check my bank feeds or possibly go online to see if it cleared the bank. If it cleared the bank, I could say, hey, look, it cleared the bank. Somebody cashed the check. Or if it didn't clear the bank, I can say, I don't know. We wrote the check. We sent it out. It got lost in the mail. And then the question is, should we void it and write another one?